Good morning, learners. This is Miss Toby again, your accounting teacher. So we are continuing with depreciation. So now I'm going to teach you how to record it in the journals and post it to the ledgers. Yeah, for now, let me just teach you that, how to record it in the journals and how to post it to the ledger. So here's another example that we can do together. 1 March 2021, bought a vehicle for 450,000 and equipment for 80,000 and paid by EFT at the end of the financial year, 28 February 2022. Depreciation on both fixed assets. Fixed and tangible is the same thing. On both fixed assets or on both tangible assets, meaning vehicles and equipment, must be brought into account as follows. Vehicles rate is 20% per annum, and they are using the fixed installment method, which is the cost price method. The equipment is 15% per annum according to the diminishing balance method. So let's do both of them. So this is how usually the adjustment comes in. It will be just 1 year. So we are assuming then we are doing 2022. So this will be the adjustment for 2022. That's it. So it won't come for you to do all of the years. You just do this one. So let's start with vehicles. It's easy. Remember, I told you it's easy vehicles. So I'm going to use the same spreadsheet. So we said, so that cost price method is going to be 150,000 because that is the cost of the vehicle, times 20 over 100 because that is the rate, times 12 over 12 because it was bought also at the beginning of the month, 12 over 12. So what is the answer for that one? Let's see if I have it worked out so that we don't spend too much time. So the answer will be now 30,000. So that will be 30,000. 30,000. So let's record it. So 30,000, that will be the depreciation for this month, 30,000. So we come here. So of course we use the general journal. I'm sure you knew that because there's no exchange of money. So it cannot be CPJ or SRJ. There was no sale. It can a credit sale. It cannot be DJ. There was no purchases. It cannot be CJ. There was no returns. So we can only use the general journal. So remember, we always start with the debit side. So we debit depreciation. Depreciation is an expense and it's increasing. So it will be debited. So that will be 30,000. Then what did we say we credit? We credit accumulated depreciation. We cannot credit vehicles because we cannot touch. If you're going to credit in vehicles, then you are reducing the amount of the vehicles because asset reduces on the credit. So we cannot do that. So we say, so that's why we came up with this account called accumulated depreciation on vehicles. So this is what we credit, vehicles. And then that will be 30,000. Okay, what did I do? 30,000. And then the narration will be depreciation on vehicles at 20% per annum on cost. That's what you're going to do. Depreciation on vehicles at 20% per annum on cost. And then let's do the other one. But this one will be easy for now because there is no accumulated. So it's going to be the same thing, but it's going to be, so now we are doing the equipment, which is 80,000. They said 80,000 and we bought it this year and we are doing it at the end of the year. So you agree with me that accumulated depreciation is 0. So again, it's going to be 150,000. That will be year 1 minus 0. So year 1 will always be minus 0, by the way. Times, what is the rate? So the rate here is 15%. 15 over 100 times 12 over 12. So that gives us, if I'm not mistaken, 12,000. So this is just year 1. Year 1. Year 1. So 12,000. So now what I want you to know now, it's better to record it together. So you don't have to make 2 different journals. So I'm going to start over. Let me start over with the amounts. So depreciation, accumulated depreciation on vehicles. So I'm going to say here accumulated depreciation on equipment as well. Accumulated depreciation. Depreciation on equipment. So depreciation will be, so accumulated depreciation on vehicles alone is 30,000. This one doesn't change. I just erased this so that we start over, but it doesn't change. And this one is 12,000. But depreciation will be for both. So you debit the full amount, which is this plus this, which gives us 42,000. So that's how you do it. And then the narration here will be depreciation on vehicles at 20% per annum on cost and on equipment at 15% per annum on diminishing balance. Depreciation on vehicles at 20% per annum on cost and on equipment at 15% per annum on diminishing balance. That's what you write here as a narration. And then we post this. Remember, you post depreciation to depreciation in the same side, accumulated. So now we have these. So let's start with the purchase. When you purchased it, so when did you purchase it? So vehicles, debit or credit. It's an asset and it's increasing, so it will be debit. So we purchased it on 20, let me just confirm, 2021. So it was 2021, and then it was March 1. And then we paid by EFT, so the contra account will be bank. We agree. So you hardly required to do bank because we know that bank will be credited, but remember you credit the whole total payments, so you don't need it. So that will be, so we did this in the GJ, and then it was 150. No, we did this, the bank thing, we did it in the CPJ, sorry about that. And then it's 150,000. Equipment, again, same thing. Same thing, and it's 80,000. And then now we record, so this one has been posted. So which means the purchase, the first part has been recorded. Now we record the depreciation. So depreciation is debited and accumulated depreciation is credited. So I can just do this. So accumulated depreciation is credited. So in accumulated depreciation on vehicles is 30,000, and on equipment is 12,000. So where is it done on the GJ? Okay, let me just do it here. So when was it done? At the end of the year. So 2022, and our year ends February 28. And what is a contra account? Do you agree that these two are contra accounts of each other? These are, because the debit and the credit. So the contra account of the accumulated depreciation will be depreciation. Contra account of accumulated depreciation will be depreciation, and it happens on the GJ. So the contra account of accumulated, so same thing here. Contra account will be like depreciation, and then this is credited, so which means this is debited. So the date is the same. Then expense, remember, so it's a nominal account section. Then, but here the contra account will be accumulated depreciation on, never writing shorthand, only I can, you can't, on vehicles. Write the full amount of vehicles. So this will be GJ and this will be 30,000. And then the next one underneath there will be accumulated depreciation on equipment, and that will be GJ, and that will be 12,000. And then is double entry complete? Yes, it's complete because we've got a credit and a debit which balances, and this one will, the credit will be the bank. We're just not required to do bank. Otherwise, that's it. That's how you record it. I'll see if I can get an exercise for you to practice on, but that's really basically how you record it. Thank you guys again for watching. See you again next time. Bye.